Hey traders, Raghi here, and in this update, let's go ahead and review the indices and what I am looking for going into Jackson Hole. But it's not just about Jackson Hole, although that is definitely going to be the main topic of conversation as we go into Friday, where at 10 a.m. Eastern, Jerome Powell is going to be speaking. And this will be after we get the PCE number and after we get the GDP number. Why is this so important? Because there is widely anticipated 3 different data releases that are going to be the most impactful in terms of when the taper will ultimately begin. GDP, PCE, and then going into the first week of September, non-farm payroll. And a lot of traders feel that if these numbers come in hotter, better than expected, that there is a very good likelihood that taper will be announced as soon as September and go into effect as soon as October. But there is a higher percentage likelihood. Right now, the expectation is close to 45% that the taper will begin in November. And again, I think these are all very data sensitive. And then, of course, the data shapes the message. The message then gets baked into the cake, factored into the market behavior. We know taper is coming. We don't know when. We don't know how much. So we've got the when in terms of a probability. The next is how much. And we're looking at a 15 billion likely per meeting taper, meaning 5 billion off the mortgage-backed securities. And then that would be 10 billion less in terms of U.S. treasuries. So that's the 15 billion at each meeting. Now, there are a certain number of meetings that are held each year. Now, again, I'm just showing, supposition. But isn't it interesting that if you take a look at perhaps let's say we go with November. I mean, we get a little bit of a Powell pause and we end up with a November beginning. That would mean that the November meeting, November 2, would basically begin the negative 15 billion off the current 120 billion per month. And then that would mean December is yet another reduction. And then if you go into 2022, January, March, May, June, July, September, November, December. All right, that's 10 meetings, but conceivably we could be done 8 meetings in. We would have 8 cuts, 15 billion each to get through that 120 billion. So we could be done as soon as September or November of next year. And that would lead into the expectation that the Federal Reserve could start hiking rates in 2023. So that's a pretty reasonable track, and nothing I'm telling you is really anything the market has not already considered as probably the most likely path to the reduction of the taper and then to eventual rate hikes. And while the uptrend did not have a big up day today in the 2 hottest indices, S&P and NASDAQ, it sure isn't selling off. Now, if there's going to be a pullback, if there's going to be a more significant move to the downside, it's likely going to be accompanied by the release of the GDP, the release of the PCE, and of course, 10 a.m. Friday when we hear from Fed Chair Powell. Now then, we've got an idea of what is happening. I've mapped out the week, what the catalysts for movement can be, what the path to taper and eventual rate hikes would then look like. Now the question is, what's buyable on the dip? And I will tell you that most of what I want to continue to do is respect the strength in the indexes, the S&P and NAS, but then go into the relative outperforming sectors within them. XLK, XLC for the NASDAQ, XLV, even XLF, although I like XLV far better for the S&P. And of course, XLK is not only important to the NASDAQ S&P, but it's the number 2 weighted sector in the Dow. It's one of the most resilient corners of the market. So I'm going to get a little bit more granular to the sector level to find opportunity. Now you can see some of the notes here on the left side of the margin. These are things that I will dive into a little bit more in the premium video. What is next for ZB? Am I going to be a buyer? Because look, what is coming in terms of Powell's action really is going to create a little bit more volatility in bonds. We broke the 165 handle on ZB today. Now, that's not a really big deal for those of us who have been long in the trade that we've been taking and rolling with this long position really since June. We built the trade around 162 to 163, scaled that at 165, 166. We're at a break-even stop. So as we move down to the 21 EMA, I am going to be watching for potentially another entry. And the same could be said for the non-trending market of gold, which is still lingering up over 1,800. But yeah, I believe pullbacks to 1,780 are potentially buyable. But let me warn everybody about this. I will probably forego gold until after Powell speaks on Friday. So gold is after Powell speaks on Friday, likely via GLD calls. Okay? All right, so two other things before we go. One is think about defensive corners of the market and which of those are in uptrends. Also think about if we do get a pullback, which corners we're going to look at, both of which we outlined, both of which are in the notes. XLU and XLP for defensive corners of the market that are in uptrends, XLF, XLV, XLK, and XLC for buyable pullbacks at the sector level. Hope that helps. There's my game plan between now and Friday. Let's see what happens. I'll talk to you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.